All right. Thank you. I was joking with the people, APIdays guys. I was following the Twitter feed yesterday, and I was like, what am I going to say after this first day? Because it's amazing. We've been talking about banking and API in banking for years now, and I think it's amazing to see this people actually starting grasping it, doing it, and making it. So I was going to talk a bit about banking as a platform, something we've been talking about for quite some time at Anthemis. So as mentioned, we're a venture group dedicated to financial services startups. We've been investing for the last 6 years. Current portfolio of 30 companies across the landscape of financial services. We were investors in companies such as Simple, who were working on an API for their banking applications back in the early days, and we're also investors in Fedor, and Betterment, and a couple others. Thanks for the show of support down in the room. Thank you. So I'm going to say something. Banking as a platform, it's not new. It's been running for 15 years in banking. It's just that the right side of banking doesn't speak to the left side of banking. Retail banking and consumer and business banking doesn't know what the investment management banking does. So I'm going to talk about a guy, and this guy is Gordon. I don't know why his name Gordon. He's an hedge fund manager, and he's greedy, and he doesn't want to run a bank. He wants to trade. He wants to have his hedge fund. He doesn't want to run a bank, and he does not. And that's the way the whole system for asset management is disconnected from the infrastructure in banking. And this is why he has organization in financial services such as Prime Broker. We even give him an office space, gives him introduction to people to fund his hedge fund, give him all the operational banking license regulated services, lend him money, and I even give him trade execution. So basically this idea that you can disconnect all these layers in financial services already exists in another part of the business, which is the whole asset management, which is completely horizontally layered across various platforms, speaking to each other and providing services with user agreements. So that was for Gordon. Then I want to talk about Johnny. Johnny is a coder. He has a super nice VR headset. He's bored. He doesn't want to use bank interfaces, and he does not. And if you do a basic search on GitHub around bank scrapping, this is what you get. Everyone builds their own bank scrapper. I mean, there is thousands and thousands of scrappers dedicated to each bank to get the data from the bank account to someone, to plug into his Excel and do his own budgeting. So this is not new. This has been running for, you look at the last 5-10 years, people were building the scrappers. There's a whole set of open source communities around building scrappers for banking. I think a French guy is actually one of the big leaders on that. So again, nothing new. It's been done. So what's changing? So going back a little bit, what we've seen with the internet and what as venture we look at is that the platform model is the winning model of the internet. And if we look back a bit on theory, you have Ronald Cozy, the theory of the firm, and it's all about transaction cost. And what APIs notably have helped do is reduce significantly the transaction cost of coordination between two organizations. So instead of requiring vertical integration as the optimal business model, you can now layer business models on top of each other because transaction costs between each of these business models is fundamentally reduced. And that's why we get those guys. Most successful companies these days are platforms. This is not going to come new to anyone here. And this is big numbers, 22 billion in revenues from the app stores. Obviously shared between the developers and the platform in as much as possible, and making big business. So why is that changing things to the banking world? This is the model we're using. This is, the framework we've been using since the beginning of Anthemis. So basically, if you look at the traditional way of building certain type of financial services, it was vertical integration. The bank has to control everything from the bank license, regulatory payment pipes, to the user experience at the top, and everything in between. And I was really fundamentally working in the industrial age. This is how you build cars at scales when you start Ford. This is like, it was the perfect business model for a perfect time, except times are changing. So now with the digital transformation, obviously, we're going to see business model moving more into the layering aspect. Not that it means that each layer will be owned by different players. It will be a lot more fluid in terms of who controls what, but you'll have obviously physical platform and digital platforms. Here, physical platforms, for banks, you can think of it as the highly regulated custody side of things, where it is required, regulation is required. You're not supposed to lose anyone's money. And that's why a functioning society is working. And then you have substrate of layers, API, that helps connect application and services. And an organization in this new world might be deciding to control entirely some part of the stack and might be deciding to delegate some part of the stacks to other players to where it's most efficient in terms of business. So modular structure. And we know why it's interesting, because banks have multiple challenges, right? They're competing for clients with new, nimble players, and we have startups presenting yesterday looking at building better banking experience. And for the traditional players, this is going to be an increasing pressure, especially in the UK with all the new bank license and new players coming in, which is going to saturate the market. We have a reputation problem with banks. I will not say anything new there, but 2008 was a singular event in the sense of changing entirely bank reputation. These people can't be trusted anymore or don't have this trust view around them. And they're struggling on consumer experience, ease of onboarding, functionality, usability. And again, I'm not going to make anything new statements around that. If you use a banking applications, you're frustrated. If you use a banking application as a business, you're even more frustrated these days because it just doesn't work the way it's supposed to. But they have two things. They have customers, and that's something that's actually real for them. They have access to already, they have all the customers on board. Maybe not maybe they don't like them, but they have contact to them. And they have a balance sheet. They have access to the core infrastructure, they have a balance sheet, they have access to core capital markets. And they are regulated to have that. And that's something that's very difficult as a startup to get, because the cost of going through the hoops of getting regulated at this level is really high. And if you take a different example, if we look at the insurance market, you look at someone like Oscar building an insurance company in New York, it costs $45 million just to start in New York State, a business, which is very tough to raise, very tough to launch. So the opportunities, we believe, lies in collaboration and open APIs. And we've seen a lot of things happening in that space. And we have, AXA was presenting yesterday, and BBVA had the chance of being there at their first challenge, API-based challenge. And I think it was amazing for the organization in terms of pushing also internally how to think differently about banking. And we've seen the BBVA challenge as well. This is all about creating internal innovation and test how to collaborate with other people. And a lot of it is also about building their own API platform, and there is no better way than putting people on top of it and trying it. And I know the open bank people have been advocating this approach for a very long time with multiple hackathons across Europe and other things. We have also the approach that Fidor, and as disclosure, we are investors in Fidor, but from the beginning, Fidor wanted to build a full banking experience and couldn't do everything, so had to connect with other providers to provide that experience. So connecting to peer-to-peer lenders, connecting with FX providers, connecting with digital currency providers to give that full experience to their customers while not controlling and not being able to provide by themselves everything. And then we saw transactions. And I don't know if you followed, but Silicon Valley Bank acquired the team of Standard Treasury, who was, at the beginning, Y Combinator company, wanted to build an API around SME banking, then wanted to launch their own license in the UK, and found a middle ground in collaborating with a bank around that. So clearly, the mindset is evolving. And I'm just going to give a few examples of what it looks like and maybe what it could look like in the future. So if you're not familiar, the Crédit Agricole store, to my knowledge, is the first application store of a big known bank across the whole banking universe. And correct me if I'm wrong, I'll be happy to see. Obviously, it's internal and external developer mixed. It has a control model, it's a co-op model. It has a toll model for the users, for the actual end customers. And it has a strict control of competitive applications. There is no PFM on the App Store as a policy decision from the bank. And so it's providing several functionalities of where you were, and some added functionalities that the bank own application doesn't provide. So it's really read-only APIs. Then we have quasi-APIs functionalities. If you look at the US market, a company like Pled is effectively hacking its way in providing an API solution by having two things. One is a read capability of Yodlee type, so plugging into the accounts, reading the information, and then very smartly connecting to the ACH system to provide a quasi-pay functionality. And so driving applications such as Abacus, which is integrating spending and expense management, Acorns, which is automated savings, so if you have extra money on your account at the end of the month, put it on the side, invest it on the market for you, and Digit, which is along the same idea, analyzing the account data using the extracts, and then putting aside the money that you haven't spent as a saving functionality for you. So effectively, circumventing access to the bank through an API to provide API-like services. Obviously, the best and easiest way to do that would be to have an API to the bank. So this is not perfect by any means. And then with FeederTech, again, I'm going to go quickly over the slide in case I say anything wrong for the guy in the room at the end. But basically, providing as much open architecture as possible for the connecting in, connecting out, and providing bank-like services for people who want to start a bank by not being a bank, but also from an architecture perspective, also providing integration into the feeder experience for their users to external providers. So where does that leave us? I'm going to steal the world from Philip Gillis, who is the CEO and founder of Kentox, who said that fintech banks will rule the world. And so you can imagine three scenarios there. I'm just going to give you three examples. Is one, in the SME banking world, what most people do in the morning is they look at their bank account, they download the bank account, they upload it in their accounting system, and they never open the online banking anymore. Because the only thing that matters for any SME finance controller or anything is the banking information within their accounting system. The banking information in itself doesn't tell anything. It's just a cash balance among a whole bigger set of data that they need. So we're very excited into anything that helps integrating further the financial service, the banking experience into the actual accounting systems of small and medium companies, because this is a really big improvement over the current experience. In terms of retail banking, the target, the goal, and one of the things we look at closely is what we call algorithmic banking. So basically having the computer make decision for the users for managing their money, which means moving money across regular accounts, savings account, investment product, borrowing, to smooth cash flow line over the life of someone, of anyone. So again, that's something you can only do if you have deep connectivity between multiple services talking to each other, interacting. And the last one is all the data sets around banking. If you have aggregation capabilities, obviously underwriting becomes a different game if you have access to deep data across multiple businesses and start comparing information across those. So just a few thoughts to finish. Interestingly, UK might be the leading market here. If you haven't followed, there has been several requests by the government to better understand the impact of API on financial services. And that will move lines quickly, because if you're forced to have an API, you're forced to have an API. That's the magic things about regulators, is you do what they tell you. So there was this September 2014 report on data sharing and open data for banks. And I think the Open Banking Group was just created in September, looking to give reports by the end of this year, is my understanding, and having a very strong impact over the UK banking world potentially. And I think this is, with the current environment in the UK regulation and UK banking, I think this is amazing times for thinking about APIs in banking in the UK. And that might be the things. I know Europe is moving as well, though more slowly. So I would say at the moment, UK is probably one of the most interesting markets to look at. And then the question on what's next, and just putting two sets here. We need to have read-write APIs on banking. If we just get read functionalities, we're not going to realize as much opportunity as possible in the market. And I know that's, what is looked at as a first step to have write APIs. But if you want deep integration into the user experience, you look at WeChat in China. They control the financial services experience, and they give financial services within the chat applications and have a whole set of things. Why can't you do that in Facebook Messenger? And to me, it's no surprise that the CEO of Facebook Messenger is the ex-CEO of PayPal, because this is where the game could be going. And the second thing is looking at business models. We need win-win business model. If you want to create an API-based, and I know that was discussed yesterday as well, if you want to create an API-based infrastructure, you obviously need the developers to win and the bank to win. So we need to think about app stores, usage-based cost, various ways to make it a sustainable business model for the developers. And that's it for the presentation.
If you can open mic too. Yeah, thank you very much. We have some time for a question. Thank you very much for this talk. Yeah, one question here.
Thank you. This is Bruno Cambounet from Axway. I have one question concerning the next steps. Do you think the PSD2, the current regulation discussed, is going to help on this direction? Can you elaborate on that?
I'm not a specialist on PSD2 by any means, but I think anything that will force connectivity, for me, is a driver of improving the business. But
okay, thanks.
We have time for questions, because I have a great one. Okay, well, I will ask it. So you are an investor, right?
Yeah.
For example, I just take the example of Bitcoin. Some banks invested in Bitcoin companies, right? Because is it threatening? Is it a threat or an opportunity? So some banks invested in companies. For, let's say, the API space, so you invested in Fedor as an investor,
yeah.
But do you think, what should be the move of banks to maybe investing in some startup too that try to disrupt them at some point,
So we've several banks that have set up funding entities, and obviously it's a big challenge for them to fund disruptors. I think the whole point of funding, if you think of it, either you fund a direct competitor, but if you fund a company that might be leveraging your infrastructure as an API player, it's more an internal challenge in terms of, one part, the retail part of the business will be obviously complaining, the infrastructure part of the business might be looking at it as a new business model. It's not incompatible. I think what we look at, if you look at the strategy of some banks, and might be looking at as an option building, right? So if you assume your bank is going to fail in the future, either you fail entirely, or you put options in terms of creating new structures for the future and building a new business on the side of your existing business. It's not incompatible. I think something we discussed is the path to get there. What is the less frightening API integration you can start with that makes significant gain for the end user? And so what we looked at especially is whether you should start with retail or start with businesses where there might be less pressure on being competitive with the banks, because the servicing is more integrating with the user. So that's one way to look at it.
And one question here. I will have another one on platforms.
I have one question. Do you think the current banks will transform to the new proposal as a bank as a platform that you mentioned, or that it will be a new company, a Facebook, a banking Facebook, or something new that appears that will disrupt the market and will make that the banks that are already running will transform to this platform? What is more possible? The question is, do we have to wait until someone disrupts the market, or the banks will transform? And if they transform, when do you think this will happen? Make a prediction.
I think not every bank is going to transform, but some banks will transform. And if you look at, Goldman Sachs has started opening its infrastructure to external parties. So they just launched a layer where you can actually, developers can leverage their own internal tools for developing their own applications. And they're moving into retail, so I think there is obviously smart people there that understand where the world is going. There is a lot of initiatives by various banks into building APIs. I mean, AXA has been doing that for 2 years and for 3 years now, I think, and others. I think dubious on that. I think it's a really bad business. They already have an amazing business model, so why not run with it and try to become something much more complex? But in the UK, it's very fragmented in terms of having new banks. I mean, US market, there's only one new bank license, which is for a bank in the Amish country, which I don't think is going to be an API bank. Not sure why. There is a couple new licenses coming in the UK. Having a new license in France is very difficult. In various countries might be very difficult. So I would say some players will get it. Some players will get it less. Work with the people that are the most advanced to you. And it's all about evangelization as well and trying to make them understand that they can have a successful business running an API model.
We have time for one last question. Yeah.
You talk about licenses. Do you really think it's necessary to have a banking license to be in that business? How about the transactional license? And I think there is no limitation. It's much easier and it costs much less money. So it means, can you run most of the startup you mentioned probably would only need a transactional license, accessing the data, and not being able to invest the deposit of the clients, also because probably the deposit are stored somewhere else. Mm-hmm. So do you see potential in the fact that you probably don't need to go through the complete mess of being a traditional, or let's say having a real banking license, which is rather expensive, but just going to the European or international level transactional business as it opens up since last year?
Well, I mean, what we've seen, and not speaking about specific companies, but building a bank-like experience on a non-bank license is really tough because to create the same, if you take the requirements of being a bank and all the requirements that people need, like check and all these things that are legacy systems, but they need as part of their. If you want to be the main account, you want to replace the main account of someone. Building that on a pure layer experience is tough to match all those requirements correctly. All the payments requirements the same way they are is actually quite difficult. It's improving, but to be entirely one-for-one on all the experience is in our experience has been very difficult. So at some points you start wondering whether being a bank would be an easier business on that side to provide, replace a main bank account. And also there is obviously the interest as well is what you do with the deposits. And currently deposits are worth very little, which was the whole, with zero rates, it doesn't make a big difference. But assuming rate change, it might be interesting to have a bank license to do something with those deposits as part of your business model. So it really depends. If you have a transactional-based model, which is lower margin, you need a certain scale to make it successful. And whether you can reach that scale is an open question. But making one-for-one analogy, so far we've seen, and maybe we haven't met the right people, is very difficult.
Yeah, we have 30 seconds left. I have one question I cannot avoid to ask. Twitter API, for example. Twitter was a platform, acquired some companies on top, killed access to many of them. But it was like an investment strategy as a platform. I acquired TweetDeck, I acquired other. Do you think banks should adopt a Twitter platform-like model to push top users of their API, maybe acquire them or internalize it, or do you think they should be really open and neutral? Because as bank institution, they may have a PR, issue on that. I
think Twitter had a PR issue for 6 months and had no PR issue afterward when people complain. It's the whole difficulty of being a platform. Is at some points you want to look at and you think someone else is making a better business on the upside than I'm making as a platform. That's the tension of being a platform, and that tension will, whatever the industry will be the same, is you start wondering whether you should control part of the stack because that's where margins are, and especially if you're what may be made a bit different is if you're Twitter and you, at the time we're looking toward a path to IPO, obviously you need to start building the business in a certain way. If banks have maybe a more sustainable business model, but I'm sure they're going to ask themselves the same question.
Do you think they need to find the fine balance? Do you think the banks needs to find the fine balance between openness? Yeah.
Yeah, I think that there needs to be a support of innovation outside of the banks and in creating business models that where they may not play a role. I mean, for example, I don't see the banks becoming an accounting system. I mean, that's too far stretched. But in integrating accounting financial services experience will happen. So the question is, where do you set the limit? How will that happen in terms of who would be the collaborators in building that experience?
Thank you very much, Yann. Thank you very much.